Good morning. It is Friday, July 12th. July 12th. I think I wrote the 11th on some things, but it is the 12th. Is today a good day? Well, it depends on what side of the fence you were on. Were you in value yesterday? Were you in tech? We'll go over all of that stuff. But I want to brag right now. I got 5 for 5. 5 for 5. Okay, first thing was Costco. We went over it yesterday. I told you $900 was going to be the price when they raised the membership. It pulled back from $900. Hopefully you got out at $900. I did not, unfortunately. So I'm sitting there holding it. Am I going to get out of it? I'll make a decision today. Pepsi, I said it was going to be a shit show of a stock. I think Brandon bought Pepsi. He works for Pepsi. Insider trading. He bought more. He thinks it'll be fine. Delta Airlines, I said you can trade it. Boom, it bounced right off that 42 that I said yesterday, and it bounced up. I said trade it, don't own it, trade it after its earnings. Wells Fargo, I said it would bounce off of 60 on the earnings. What did it do? It bounced off 60. It's trading at about 55 today. And then I said buy Citi. Citi is the best bank that you can do, and it's up today after earnings. It's the only bank up after earnings. So I nailed it. Where can you get all this? In the Daily Stock Pick newsletter. All of this stuff, some of it's free. The Costco stuff for free. The Pepsi, the Delta, the Wells Fargo, and the Citi, that is all in the weekend newsletter. And it was all this weekend for paid members. So if you're interested and that's your type of thing, that's the type of thing that I provide in this newsletter. It's 5 trader tips. And then I go over, hey, here's the earnings list this week. Here's Pepsi. I didn't think Pepsi was going to be good. Then I said, hey, here's Delta. I just took a look at the charts and I took a look at the earnings hub stuff that was out there. And I said, Delta, trade it. Don't own it. You can trade it, but trade it after earnings. Then I said, Wells Fargo, I own this stock. I purchased it at $40. Current book value of 46. The current price is 1.3 times book value. JP Morgan is trading at almost 2. Just like Delta, it's a strong buy in the quant from Seeking Alpha, and Wall Street price target is 7.5% higher. I said my opinion of this stock is to hold 60 in order to prove it can sustain a measured move higher. That's it. It did hold 60, but after earnings, I may trim some before earnings. Friday sentiments will shape how financials will trade over the next few months. So any reason to sell these at or near 60, I'm going to do that. I've got quite a bit of in my brokerage account over 1 year, so I'll gladly pay that. Then I said Citi. This is Mike Mayo's number 1. How are you going to trade it? I went over some stuff. My thoughts on this one, you've got a 6% gain with an average win in the algorithm and a 7.86. So it might turn over a little bit. I like the stock long term, as you can see from the weekly. But it is worth the risk in going into earnings. I like this stock and plan to add to it to my portfolio. Add it between 63 and 65 before earnings. If the stock pulls back after earnings, I will most likely hold the stock and add to it. I like everything about the stock. Peg forward ratio. Let's go and let's look at Citi. Let's pull up Seeking Alpha and let's look at Citi. SeekingAlpha.com. We'll pull it up because I don't have it ready because I wasn't ready to really brag about this one. But the paid newsletter, I mean, that paid newsletter just paid for your year. I mean, that weekend just paid for your year. That's it. I mean, you're in pre-market, you're at 67. I said add between 63 and 65. Most likely, if you put $5,000 into that, you just paid for the newsletter. So think about upgrading to the paid newsletter because, again, I may be Nostradamus. Now, let's talk about Producer Price Index. Yesterday, we got the CPI. It showed that inflation was curtailing a little bit. It was good. Everybody thought we would fly. We didn't. It just, the market, if you're invested in tech like I am, the market felt bad. Okay? But what I want to point out to you is that 7 of the 11 sectors, and again, this is in Seeking Alpha, so you can look at all of these sectors. 7 of the 11 were up, green yesterday. What was down? Tech, 2.5% down. Consumer discretionary, XLY, which includes Tesla, 1.27 down. Communication services, down 1.37. But what I also want to point out is consumer discretionary year to date is up 6.33. Down 1.27, who cares? You're up 6.33 over 1 month. Year to date, 5.71. Technology, Who cares about 2.5%? It's bound to pull back at some point in time. Yes, it's drastic, and yes, it feels bad. Over 1 month, you're up 5.25%. Year to date, you're up 20.39%. So I want to put this into perspective. You can't time the market. This was simply a rotation day. And this PPI doesn't do good things about the economy. It says things are costing more. But the market seems to be holding up. If we didn't have that pull down yesterday, you would have had it today after this PPI. And I'm still not sure what the market's going to do. It's a Friday. I'm not making big moves. I'm not adding to my positions. After yesterday, we'll go over it. The biggest, NVIDIA was the one that moved everything down. I bought NVIDIA on Wednesday. So, I feel like a douche, but this chart that I put on my Twitter yesterday, 5-day chart from Seeking Alpha, shows a clear divergence from tech. The green line is IWM. That's the small and medium cap. The orange line is RSP. That's the equal weighted ETF for the S&P 500. Look at what's going down. It's SPY and it's QQQ. Everything else, and SPY, just so you know, that's market cap weighted. So you've got your big tech, Apple, Amazon, all of those, NVIDIA. They are heavily weighted in SPY. In RSP, there's just one share of all 500 stocks. That's it. SPY, it's heavily weighted. You might have 10 shares of Apple compared to one share of Walgreens. I mean, again, I don't think Walgreens is even included in it, but whatever is Cisco included in SPY, S&P 500. So again, you want to, this is just a rotation day. IWM was up 3.4% when the S&P at one point, the S&P was down 1%. 400 of the 500 stocks in the S&P were actually positive. So again, it's just a rotation. One day does not create a new trend. Fun strat yesterday. This is Tom Lee. As we have written many times, the lag in the CPI report has been shelter and auto insurance. Both now seem to be cooling off. This is why we expect inflation to fall like a rock, because all the other components of CPI are largely back to below pandemic levels. If that's the case, and that's where we're going, it's not like you're going to see all of these stocks crash. You might see the rest of the S&P 500 pull up. You might see IWM pull up. And how do you want to trade these? Well, you can go and look, IWC. Seeking Alpha gives you all of this stuff, okay? I think it's part of premium. You might have it for free, but it's IWC, it's IJR. You want to take a look at this chart, this page. And how do you get to there? It's just market data, and then it's key market data. So it's very simple, but that is something that you want to look at, because on days like yesterday, if you see a red in a place in your portfolio that where it's heavily weighted, that doesn't mean that it's a bad day in the market. It just means that your portfolio might take a hiccup. And if you're comfortable with your portfolio, then you'll be comfortable moving forward. The VIX is only at 13. So it's not like we've got this crazy market. And so understanding that is important. Now, that's to calm you down. Now, to add to this, Trendspider. You guys know I use Trendspider to manage they have a new indicator. It's called relative performance. And this one looks interesting. Okay. It just, you can add it to your setup. I will play with it probably this weekend when they come out with new indicators. I love when they come out with new indicators. This one is, you can read this blog post. I will put it in the newsletter. They indicate here, they visualize it here. This is Tesla. You wanted to get in on Tesla? This relative performance on your charts, it showed you when to get in. You wanted to get out of CAT, before its huge 14% downside, it told you when to get out. So this is a great indicator to put onto your charts. I will see if it works for me. This is why I like Trendspider. Trendspider continues to add things like this without upping your price. If you want Trendspider, you get my 4-hour algorithm. We'll go over more. It's in Linktree, linktr.ee/daily stock pick. And you go to the Trendspider page. It's up top. $53 a month. $53 a month. It is fantastic. I love this service. It's the best charting platform out there. You get to back test all of the strategies. Say you want to build your own strategy. They've got ChatGPT. So you can say, hey, build me a strategy that where the any stock crosses under the 8-day EMA and crosses up over the 8-day EMA on a weekly chart. And you can ask ChatGPT to write that in the software, and it will write it. It will backtest it for you. It is a powerful, powerful tool. So, Trendspider, it is my favorite, absolute favorite tool. So let's go over the biggest. Oh, I should say, you know what? We'll save this. Biggest movers of the day. Tesla. Eric, which is Ericsson, stock rose 7% despite a 7% year-over-year dip in revenue. Immutep surges 20%. The biggest one is Tesla is down again. I will tell you, I sold out of my parents' Tesla account. I've been saying this for weeks. They finally gave me the ability to trade this one. And I literally saw it move yesterday from 260. And I've posted this chart. Again, I posted everything that I look at. I post in that newsletter, whether it's free or it's paid for. Everything I do, I post in that newsletter. And I've posted this chart many times before. I said, in order to get over 260, you needed to get over this previous high. And you needed to hold. It didn't hold. Did I get out at 263? No. I was literally sitting there watching it. And it went from 265, I think, down to 255 within 30 seconds. I said something's up. I hit the sell button on the entire lot. I was going to start trimming because I said it's not holding 260. And I said, okay, we're going to start trimming this one under 260. As it gets to 260, I may start adding a little bit, playing around with it, blah, blah, blah. It's in a retirement account, so there's no tax events. So I'm able to buy, sell, buy, sell, buy, sell. At the time, I saw it move from 260 to 265, somewhere around there. By the time I pressed the sell button and I didn't mark it, I think it got out at about 252. Okay? 30 seconds later, news broke that the robotaxi event was delayed until October. Not August. It was delayed. Was there any clearer sign that you should sell at 270? Other than the day before, Jim Cramer set out and it came out and said Tesla could be a $1 trillion market cap. And people were touting this. The signal is clear. Jim Cramer, he says that a month before, he said that he'd rather own GM than Tesla. I'm not saying, this is a 100% curse, but the man has an ability to just, curse any stock that you're in. I did get out. I will get back in. I did not get out of my XLY because of this. I got out of the Tesla stock in my parents' portfolio. My mother yelled at me when I did it. I called her up. I said, I sold out of your Tesla. What are you doing? You're crazy. Then at the end of the day, she called me a genius. When your mom calls you a genius, that's what you live for. So I did sell out. The theory of the postponement. This was good. Okay. The theory of the postponement, let me close these two down. This Tesla is fully aware of the $144 support. This was posted from this long investor. He posted this. Elon pumped the stock. I think that's what it was. He made a bold move, declared Tesla would announce the robotaxi on 8/8. This would, after his $56 billion pay reward judgment. Price then jumped from 144 to 265. Elon gets his reward. What a stroke of genius by Elon. He just delayed it. He knew it wasn't going to be ready in August. And by the way, I said this. It ain't going to be ready in August. August would have absolutely been a huge disappointment. Anybody that has a Tesla knows full self-driving is not where it should be. Now, what popped on this news? Uber. Do you have Uber in your portfolio? Did you grab it in the 60s? Uber and Lyft both popped on this. Uber's the one that popped. My algorithm makes you 95%. Sure. If you buy and hold like I do, you're up 239% in 24 months. But Uber popped on this one, and the algorithm got you back in at 73.48. Where are you trading now? 72. I would say wait until you get in the 60s to add this one. I think you've got pretty good support down here at about 62. Somewhere in that neighborhood, 60 to 62 is your support level. You are using the 200-day right now as resistance. Until you can hold this, I think you can easily buy this in the 60s. Once you hold this, I think we're going to the 80s. The problem is You've got earnings coming up on July 29th. If you want this before the earnings, just buy it. Just add it to your portfolio. It is in the Daily Stock Pick Core portfolio. I like this one. Again, it is what it is. Now, NVIDIA. NVIDIA leads the slide as the douchebag here bought NVIDIA on Wednesday, and it led the slide down. And it's not like it's coming back up. Am I upset that I bought NVIDIA on Wednesday? No. Little bit of a miss, maybe. A little bit of a chase, perhaps. But it's a long-term buy. And I've said this before. Anytime you can get NVIDIA in this range right here, I think you're okay. So I'll add more to it as it comes down. The MACD is in a relatively good situation. Now, what you do have to worry about is the long term. What happened yesterday was people started taking profits on NVIDIA. It came down. What you have to understand is how far this has run in a very short period of time. In January, this was selling at $15 in January 2023. $15. It wasn't the low. The low was at $12. Remember, that's $120 before the split, the 10-for-1 split. So again, I don't mind buying up here. The valuation is good, but yesterday's sell-off was just in tech. This article outlines it. Now, here's a good article. New weight loss drug. Best alternative to Eli Lilly. Seeking alpha, folks. Say Amgen. AMGN. AMGN, they say. We've gone over this one before. I think it was in April or something. I brought this up. That Amgen has weight loss drug. It hasn't been approved. It will not be coming out anytime soon. But you're seeing this one. I think it was April where I brought this up, that down here at 262. And you're at 325 right now. Rumors of GLP-1 will drive this stock up. Now, where are you right now? You're bouncing up against the double top here at about 330. Okay? Until you get over that, I'd say that's your resistance level. So do not add to Amgen unless you understand that the chart makes sense. That your chart, you need to understand the chart. That at 330, you don't want to buy it. Maybe at 335, after an extended kind of stay at 330, you may want to buy it. Right now, it's a hold. The valuation is a D. If they don't come out with this weight loss drug, this is going back down to a 100. So understand that this is a risk. It's the best sentiment. I like the play. Here, I'd probably wait for it to kind of come back down. Now, Zap Electric. This is one that's been going nuts, okay? Zap Electric lands financial commitment of up to $50 million. This is the person in, if you ever fly Southwest, the guy in a C group who's dressed in Gucci and didn't know that he booked a Southwest flight. He dressed up for first class. He's in the fucking C group, okay? That dude is lost. It's like the guy getting dropped off at 11:45 on a Thursday at a Walmart in the Midwest, and he's dropped off by a limo. Okay, he sees the dad with a ponytail and the wife on a scooter with 9 kids who are opening up frozen food section pizzas. Okay, that's what Zap Electric is. That's what it is. It's just a stock that's going to run. And it's a crazy, crazy stock. It is up 31%. I got a question about this one on Facebook, I believe. Believe it was, is Zap still a buy here? Zap is one you want to trade on a 5-minute chart. It is not one you want to trade on a longer term chart. It is one that will absolutely go nuts. Any kind of news on this one will absolutely make it go crazy. Now, I do have a 5-minute scanner here that I provide you when you sign up for Trendspider. And I haven't looked at this in the 5-minute, but the entries are A+. So if you want an entry into this one, it's absolutely A+. The exits, I would sit there and just look at the chart. The entrance here was at $9. You had this one at $8. You lost confirmation here at about $8.87, maybe $9. Maybe take your profits. You got all the way up here to $9.89. That's a great profit right there. Okay, this one at $9, you never really lost confirmation. It trades very light in the after hours, so I would tread lightly. But look at how it just flew on the open. It just flew. MACD, low. RSI was at 50. It's jumped up to 60. Would I be holding this one right now? I'd be selling at $12.50. Honest to God, I'd be selling at $12.50 if I bought this at $9, and I'd be waiting for it to come back down to $11, and I'd be trading it. But again, Zap Electric gets these crazy moves. It's not nuts, but it's not one that I would, and you see Wall Street says it's a strong buy. Let's go over to Wall Street and see. It's one analyst. So be careful. Understand that when you look at these quant ratings and you have Seeking Alpha, it's never a good thing when there's just one analyst. It's not covered by Seeking Alpha. It's got, I think, a 30% short interest. Let me see. Does Seeking Alpha tell us the short interest? No. Yeah, short interest right here. 28.02. Okay? 28% short interest. So, earnings. JP Morgan beat. I won't go into too much. JP Morgan, I don't really own it. I don't like it. Wells Fargo beat. It dropped down from 60. It was a perfect play in the thing. And Citigroup, it's the only, it's back down to negative. It popped on, we can look at Citigroup here on the 5-minute. You can see you had the opportunity to trade it. If we go back here and we just look at the 5-minute, look at how it popped. Then it lost. And I think the market might be losing kind of steam. Let's see. The Qs are up. It's kind of even. But the bank's just lost its steam. I don't exactly know what happened, but you had the opportunity to trade it. If we go into the 4-hour algorithm, which is where I would say trade Citi, I said in the paid newsletter, this has a book value of $66. I think it's tangible book value of like $85, somewhere in that neighborhood. It's trading under that. The algorithm got you in at 60. Now again, I pointed this out earlier in the week. Let's see, July 8th, 63. You're at 65. I would be adding to this, and I probably will be adding to this. The catalyst was the earnings. Wasn't fantastic, but it did a nice little pop. You got all the way up to 66, it looks like, on open. It opened up at 66.57. It's been dropping ever since. I think people are taking their profits. But that's going to be expected with a stock like this. Again, it's a turnaround story. And I think 99 is where you're going. Again, this $80 is going to provide you resistance, but you're about to get a golden cross on the weekly. I don't think that you stop this run here. So again, Citi, I would add to a long-term portfolio. The Education Center, the part of the podcast here. This is a great thread. This dude, Dan Zanger, he's famously known as a swing trader who turned $10,000 into $18 million in just 2 years. If you want to be a true degenerate, go and study Dan Zanger. I will include this link in the newsletter. If you're on my Twitter, you can see it. I reposted it. I watched a couple of the videos. He identified one of the ones that I watched. His biggest single day was like $3 million. He bought puts on eBay. And he said, I just didn't think the revenues would line up, and it was too overvalued. And this was, somewhere in the 2000, during the dot-bomb stuff or during a highly volatile time. And it lost like 10, 15%. Dude kept adding puts and adding and then sold out. And within a day, he was up like $4 million. And he said that was his best day. So it's one that you want to look at. Are you going? His results are not typical, to say the least. So understand what he does. Look at it. If you're interested in that kind of thing, just to understand, in my world, options are just gambling. I don't, if you want to follow options, Ed Corona, the options oracle, I recommend him on my Substack. He is one that I think has a valuable insight into options. I don't even touch it. Now here, Ross talks about $11,000 day trading on 14 stocks. He talks about momentum chasers and how Ross figures out which stocks to buy and what to watch. Some days there's a lot of volatility in the market, and determining what stocks to watch can be tricky. He made $11,000 on 14 stocks. Again, his results are not typical. So understand that you can watch this and learn about it, but do not try and implement these things. These are guys that have years of training. So it's going to be next to impossible to actually look at that. Now, I will guide you on earnings next week. I will guide you in the paid newsletter about earnings next week. We've gotten through this week. Earnings next week, we have BlackRock, we have United Health. United Health passed $500, okay? Do you want to invest in United Health? I say United, it is in the core portfolio. United Health is at 509. This is one you want to buy under 500, and you want to sell it when it gets over 500. Until it changes that range, I don't think it's one you want to actually buy and own. I've been in and out of this one plenty. Their earnings are coming up next week, July 15th. Let's look at an earnings hub, and I'll teach you how I kind of look at these things. And I'm no genius, but when I look at this, they reported $6.91, $99 billion in revenue. That was their last earnings. This time, they're expected to report $6.71 and $98 billion in revenue. Do I believe that this one will actually meet it? I don't think so. I mean, again, I'm not a big fan of this company. This company kind of screwed my parents on their health insurance. I'm not a fan of it. But, if you reduced performance, do you want to get into it? I would say if it's under 500, you're probably fine. But again, if it dips under 500 after its earnings, just buy more. It's one that consistently trades like that. Now, Bank of America, I own. It reported 83 cents, expected 81 cents. Revenue, about the same, 25.29 versus 25.98 billion. I think this one does fine. Am I holding it? Yes. I would rather see you buy this under 40 before earnings. So if today, for some reason, it goes under 40, I think you can buy it. Now, do I think that, you're going to get to 45 or 60 or something like that? I don't know. Lord knows where the price is going to go. Lord knows where banks are going to go. I've owned this one since 30. I was pounding the table. You should buy this under 30. I've owned it. Morgan Stanley we have. Interactive Brokers we have. J&J. We have Ally Bank. We have American Express. We have Netflix. Let's take a look at Netflix. This is one that I said is $700 stock. They reported $5.28. They're expected $4.42. I think they're going to blow it out of the water. If you're on the ad tier, they're making more money off of you. So I think this is probably a good bet. It pulled back to $6.50. I think this is a $700 stock. So I will write more about this in the newsletter. But for you for free, if you listened on a Friday, I think Netflix on this pullback is an absolute buy. Algorithm got you out. I'd feel more comfortable if you got in with the algorithm, but depends on how it trades today. Maybe next week we get a nice little insert, but it got you out with an 18% gain. An 18% gain. You bought here on May 1st. I mean, it was May. You're July, 2 months, 18% in 2 months, and you're telling me that the algorithm's not good? Again, you get the 4-hour algorithm when you sign up. But, again, earnings next week. You have American Express. I'll pick about 4 or 5 of these, maybe 3. I don't know. We'll see what we have. But I'll pick a couple of these, go over them in the paid newsletter this weekend so that members can actually benefit from this stuff. So let's look at some social requests. Aliana. I hope I said your name right. Parknev. I just joined this community. This is from Facebook today. And pumped to be here. Gary is truly the best. I am not. I am a douche on the internet. I am learning so much from listening to your podcast every morning. Would love to hear your thoughts on PDD. I know there are risks with this one, but it is so highly rated across the board. Thank you. PDD. So here's my thoughts. I don't trust China. I am a believer. If you want to look up the man on Twitter, his name is Kyle Bass. He's an investor, long-term hedge fund guy. He's one of those guys who's a little bit too patriotic for my sense, but I like him. I like his thoughts. He says don't trust China, and China's crashing. PDD, I've said it before, and I've got this yellow line here. This isn't something that comes in Trendspider. This is just from me putting it up here, okay? And how did I put it up here? I put it up here because that is your resistance level. Look at that. I mean, if you say, back here in November 2020, you had a couple of weeks where you just sat at this level, that's capitulation. Here, it tried to get back above it for a couple of weeks. It didn't get there. And then here in December, tried to get above it, couldn't get above it. Here in April and in May and in June, tries to get above it. It can't get above it. Until you can provide me proof that this has turned into support other than resistance, I think your cap on this one is 149. Let's go over to Seeking Alpha. Let's see what Seeking Alpha says about it, because I think it's probably a strong buy in the quant. Yeah, it's a strong buy in the quant. Most of China is a strong buy in the quant. The reason is the valuation is low, the growth is high, the profitability is high. I don't trust China. If we go to Wall Street and we look, I think there's probably 10, 15, 41 analysts that cover this. Now, they're all saying strong buy, 205. What makes you think that 205 is actually in this stock? That is the 2021 highs. And I think clearly in this stock, this has provided you resistance at 143. Now, again, if you want to invest long-term and you think that these guys know what they're talking about, I will tell you, I see this one clearly moving at this 150 level and not getting above it, and them still raising their price target. So, Aliana, I think you have to do more research. I don't like it, but it is ranked number 1 out of 30. For me, there's so many other good opportunities in this market that I can take care of. I just think that there's other places out there. Now, if you want to put $100 on PDD and see if it breaks through that 150 barrier and then, start adding to it after it creates that, I think you're good. Once you get above that 150 level, I think you can add to it. Again, the valuation is there, but until you get to that, I don't trust China. And it's not like I'm a China hater. I love China. I've been to China. I've been to the Great Wall. I have a great story on China if I ever kind of decide to tell it. But I have a great story about visiting the Great Wall. The people, fantastic. We were followed by the government. This was 1993, so it was years ago. Followed by the government. We were students, and you see who's following you. I mean, it was pretty obvious at that point in time. But I love the people of China. I love China. I just don't trust the administration of China, the communist administration. They pick winners and losers. So in my mind, that's not one that I want to invest in. I'd rather invest in something in America, which actually has, the market decides what's good. So Lil Pablo commented on Spotify. I have found out from Spotify, they messaged me. I said, why can't I get comments? Well, here in the U.S., I guess there's no comments allowed yet. But Lil Pablo was able to comment on Spotify. The comments are coming to Spotify. So understand the comments are coming. Lil Pablo says, and I love that name, Lil Pablo. I could say that 10 times in a row. But I love the pod. Can you look at RRGB? They seem to have changed the menu. And 2 stores near me, consistently packed with people, seems oversold and undervalued. Is this Red Robin? Is this the bottomless fries? Yeah, Red Robin. Oh, I like their burgers. In fact, I had a burger last night. I'm usually meat free, but we were in Walmart. I bought a brioche bun, had some, and I fry up air fryer, some golden potatoes. They're like French fries. Oh my God. Don't get me started. It is so good. I'm going to have it again tonight. So just in this short look at it, it's upper left to bottom right. I will tell you the consumer in this particular category is stretched. And it's fine dining casual, and you look at like Dave & Buster's, you look at Darden, you look at others. It's not just Red Robin. And yes, they are packed, but their costs have gone up. So I would say in this one, the algorithm makes you 64%. You lose 30% if you bought and held for 24 months. So 2 years. If you bought and held, you lost. It's upper left to bottom right. Now, what does that mean? That just tells me I want to see a direction change in the stock. So when I look at the weekly, I see the 200-day is moving negative. I see the 50 days moving negative. You can't time the market. Yesterday is an exact replica. You can't time the market. The market will always surprise you. So you want to wait until you can spot a positive trend. Now, if we go over to Seeking Alpha, let's take a look at this. And by the way, I like Red Robin. Red Robin has those endless fries or something. I love it. Average price target of Wall Street, they've got 5 analysts. So it's not a lot, $15. That's 157% upside. But you can see they've consistently brought their price target down. Now, the revisions, we can see D. 0 up, 3 down, 2 up on revenues, 1 down. Now, if we go to the valuation, we can see they're not making money. That's the problem. They're not making money. And then if we go to growth, let's see how much their revenue's increasing. They're losing 1% of revenue per year. And with increasing costs and reduced revenues, that's a problem. So in my mind, my guess, and it's just a guess, they've got to probably close some restaurants. They've got to whittle their restaurants down. I bet they have underperformers. RRGB's Q1 was bleak, and the high debt poses a midterm threat. So it's the debt. So again, what you have to understand about stocks is it's this whole business. It's not just, hey, I'm going here and the restaurant is packed. It's the whole business. And when debt kind of crawls into this space, and a lot of these restaurants were killed by COVID and stuff, that's the debt when you want to look at it. When you go to valuation and you look at this stuff, the sales, they're doing well. It's just the debt, the profitability. When you look at this, they have 13% margin. The sector median is 36%, I'm sorry. So the sector. So let's go and look at their industry and see what's good. Okay, Brinker International, which ironically is an alpha pick. I don't know if I'm supposed to say this, but it's an alpha pick. And you can see this one is a better trending stock. So it's ranked number 1 as far as restaurants go. And you can see it's got a C. Wall Street says it's a hold. We can look. 19 analysts cover this. And we can look at the history of the price target. It's now over its price target at 62.59, so 4% downside. So, but they have a much better valuation. And that's what's driving this stock up versus Red Robin down. Now, when I go and look at EAT in the 4-hour algorithm, you make 59%. Buying and holding makes you 174%. Now, EAT, when it got picked by Alpha Picks, I think it was around here at about 65, where it's trading right now. They didn't get in at 46. My algorithm got you in at 46, got you out with a nice 45% gain. Then you got to buy in here, and it got you out with a 2% loss. But it saved you from this other downside. Would I buy into this one now? I would not. I would probably wait because, again, you want to take a look at these volume levels here. I'm seeing that it broke down below this $67 volume level right there. That's a pretty big volume level. That might bring it up. But if you break this 61 price, okay, if you break that 61 price, you've got stair steps down to below 60. And the largest holdings are right there at 48. So again, you want to take a look at those volume levels here. Now, the RSI, super low at 30. The MACD, super low. I'd rather wait for confirmation. When the algorithm tells me to get in, I'll get in. You win 38% of the time. Your average win is 14%. This was a fantastic run. So, Lil Pablo, I'd be a little bit concerned about Red Robin. I think you continue to eat there, but take a look at the prices. The employees, again, what's with the producer price index includes wages and things, and that's where restaurants have been hurt. Is some of these people have gotten raises and they deserve it, but the overall restaurant is making less money, and so Wall Street's going to punish that type of restaurant. Let's talk about scans. Uber. We talked about Uber being a cross-up. Uber is in the core portfolio. Uber's at 72.73. The algorithm got you in yesterday at, let's say Uber. Oh, it's doing it again. It's crossing again, but you can see it. STRL, Sterling Infrastructure, 117. 117. This is in our watch list. It was either a alpha pick or it's a Motley Fool pick. I'm not sure which one, but STLR, DraftKings. I've traded DraftKings a number of times. When you get over 40, you sell DraftKings. DraftKings right now is trading at $37. And we talked about that 50-day. That 50 days moving positive. I think, again, if you want to listen to the algorithm, you make 189%. If you buy and hold, you make 183%. That's over 2 years. You win 42% of the time. In my mind, this is one worth taking a chance on. You're coming up on earnings. I think that the Summer Olympics, they're saying it's going to spur some betting. I think you get some positive stuff. If anybody's watching wide receiver or Hard Knocks, it's NFL stuff. NFL season's coming up. Maybe they got higher. So I like DraftKings. On got a cross up. Honeywell, a bunch of crypto names. Almost the entire crypto watch list that I have on Trendspider got cross up. GBTC, BTCW, IBTI, IBIT. HODL, all of those ETFs. JEPI from the income, OIH, Halliburton, COP in energy spaces, leveraged ETFs. Ironically, yesterday, UVIXI got a cross up. We can talk about this one. This is a triple levered ETF on the bull of, this is the short of the VIX. The VIX is at 13. So SVIXI is the one that is the bull one. With the VIX going down, SVIXI has gone up. Okay, it's a triple levered ETF. And if you don't know the VIX, you don't know this stuff, don't get into this. But SVIXY gave us a cross up here at 61. You're at 64. That's almost a 10% win. Your average win is 10% on this one. Over 2 years, you make 66%. If you trade with the algorithm, that buy and hold makes you 159%. I would argue you do not want to buy and hold a triple levered ETF that's tied to the VIX when it's at 13. If the VIX goes up and the market goes down, this one will go up. But again, the VIX is at 13. It's not something that you want to do. But we got a bunch of these. SQQQ also had an entry in the algorithm. Now, that's obvious because TQQQ really pulled back yesterday. So SQQQ was way up, 763. Do you want to buy and hold this one? No, you want to trade it. So TQQQ, we talked about that one being a positive in the market. That one is up today. I got a question yesterday about, should I buy and hold TQQQ? I would say yesterday's TQQQ, it's still a hold for July. You've lost confirmation. So the key point is, yesterday at about 81, you lost confirmation and you traded, the high was 85. The low on this candle was 79. So once you lost confirmation, you traded below it. You can always buy this one back. Again, you can buy these things back. So once you gain confirmation, you could do it again. That's how I would trade some of these triple levered ETFs. If you want to just buy them and forget them and say, hey, Gary told me 100% win rate in July. Well, yeah, you can do that. We can go back and we can go back 14 years because this is the trade that got you into this. We can go back the week of the year. And we're going to go back to 2010, January 2010. And you can see the first 2 weeks are great. And we talked about this. Next week is not very good for TQQQ. 36% out of the last 14 years. Okay? The mean change was 0.07. So it's not a lot. But again, that week tells me maybe this next week is going to be weak. Historically and seasonally, it might be weak. Now, if we change this to the month of the year instead of weekly on Trendspider, and again, this is all available in Trendspider. You can see the month. If you bought this at the beginning of the month, you're up, and you very well may win. We talked about the mean change being 13.54%. So again, that's a big mover. You're up 10% on this one already. If you bought at the beginning of the month. If you bought when the algorithm told you at 67, you're up 26%. Mean change 13%. So you may have some downside. Maybe you come back down here. But again, next week, it's showing as weak. That's just seasonal data. So maybe you want to sell out on Friday. If next week starts to become strong, just buy back in on Monday. But take your profits on a Friday. That's the way I would play this one. But again, if you have any questions, hit me up. Remember, all of these services, we talked about the Alpha Picks. We talked about EAT being an Alpha Pick. Alpha Picks is the third link on there. Look at the portfolio performance of Alpha Picks. 122% versus 35%. You have another pick coming up on the 15th. So if you want to find out what the pick is, join Alpha Picks. Use the link tree on the link. Use the link on the link tree because it saves you $50. That third link saves you $50. Now the second link, you saw me go over the quant. You saw me go over all of the ratings. That's a super easy way to value a stock fundamentally. If you don't understand fundamentals, they give you grades. And that's what you want to look at when you go over here and you see these valuations and you see the ratings. The quant beats the market. So that's where Seeking Alpha Premium. Remember, Alpha Picks is one subscription. Seeking Alpha Premium is another. And I save you $25 off with my link. Trendspider, this would be my number one tool that I would tell you to get. So I like this one. It's $53 a month. What you do is you go to the link tree, you sign up through that link. And then you go to the email address right here. Send me a screenshot of your account information, including your email. The email is the key one. And so email me, and I will email you back a welcome letter that includes links to import everything into your setup. You don't get my setup. The screen setup is part of the newsletter, so you have to sign up for the newsletter to see my screen setup. But I link it to you in the welcome letter so you can see it. And it's a free 7-day trial for the newsletter. So get the setup. You can set everything up like exactly like I have it on the screen. You can set up the 4-hour algorithm. You can set up all these watch lists. You can do the scanners like I do every morning. It's all there for you. So again, those are the tools that I use. Look forward to a weekend email, including some earnings play because we're heading into earnings system. I see Tesla is up 2% at 245. Everything that was down yesterday is up today. Apple's up 1.61%. I'll tell you, usually when I get off on, I'm doing this, I record live on YouTube every day. And usually when I get off, the first thing I do is look at my Fidelity account to see if I'm beating the indexes. So let's see if I'm beating the indexes. My guess is I'm probably not. Meta's still down. Meta is at $500. Buy that. I am up 1%. Okay. The NASDAQ is up 0.76. I'm up 1%. I lost, I think, 1.75 yesterday, almost 2%, but I'm up 1%. I have made tremendous gains since May 1st. So if you have any questions, hit me up. I'm free. I am open. Everything that you guys send me, I reply back to. If you've listened this long, you must love me. So again, keep on listening. I appreciate your support. Thanks. Have a great weekend, everybody. Take care. Bye.
Every morning I wake up to the sound of the trading bell.